Hi, good morning, good day. It's Monday, 22nd of October 2018. Welcome to our global webinar called Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market fee, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down and displayed there. Also some other information, what you maybe like to read, for example, the key information documents, the kits, everything available on admiralmarkets.com. Also the different options and offers we have for retail clients and professional clients. Maybe a picture shows more than 1,000 words. If you are in the European Union, since August 2018, there's a new ESMA regulation in force, and we split to 2 client categorizations, so retail clients and professional clients. Main point we like to show here is the margin requirements, 2 prominent examples, DAX 30 or also Euro dollar. The margin requirements could be quite different. If you are a professional client, you like to get the status at Admiral Markets, you can apply on it on our webpage. Here's a link. So retail clients will get some benefits like an unlimited protection against negative balances. Professional clients by regulation get that not. But some brokers and of course also Admiral Markets have an additional protection. We call it negative balance protection policy. Here also professional clients will have a protection up to 50,000 British pounds, what is round about 70,000 euro. More on our webpage, just check it out. This is me. My name is Jens. My English made in Germany, but I'm not the main speaker. I'm such a German guy. We are a big international broker, over 18 country offices. So my English made in Germany, but the main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, it's Dick's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade, you will get many benefits only with us. For example, DAX 30 or also Euro dollar, 2 spread of just 0.8 points or pips during main trading hours without additional commission. Also here, check all the details out on admiralmarkets.com, for example. And if you'd like to contact us, you can call us or send us an email or visit YouTube or Facebook. Usually the live webinar will be recorded, available in a couple of hours in our YouTube channel after the live event. Enough from my side. Now it's time for Jay. Good morning. Good day, Jay. What's your view to the markets today?
Hey, good morning, guys. Happy Monday. We have an excellent week ahead of us. Good morning to you, Jens. So let's get right into it. Great attendance this morning. Thanks for showing up, guys. We really appreciate you. All right. Trade last week, I was looking to long the gold market. The issue was, how could it else be? As you can see right here, gold didn't do anything last week. Why? Because the dollar didn't do anything. So as the dollar didn't do anything, gold traded in a box. So we still longed at 26.5. The high was 32.32. The guys who know how to trade volume and price action actually realized that 131 is getting sent out of the door every single time we're heading into the top edge. It's just getting hammered. Every single time we're heading into the lower edges, we're getting bought up due to some risk element aspects. So we're longing the bottom edge and we're shorting the top edge. We're trading in a box. Traders do what works best as long as it stops working, as long as the dollar is not rallying or coming off. And I'm in the dollar rally camp. This market will continue to trade in a box. Very simple. Headlines this morning. We had risk on. Why? Because the Chinese came out with a tax cut, and President Xi said he is in full force and effect in supporting asset markets. So we saw a rally. Asian equities were green outside of Australia. They have a political scenario over there. Nikkei rallied as the yen came off. And then Shanghai and Hang Seng clearly outperforming dollar renminbi at 6.9236 mid, so still higher than last week, i.e. the renminbi continues to weaken. Secretary of Treasury Mnuchin yesterday said, or over the weekend came out stating that the U.S. is looking at changing the law and regulation actually they're looking to change the way that they determine some other country a forex manipulator by implementing an old law and not the most recent definition. That's to the liking of Trump, who wants to exert more pressure onto China, and we need to keep an eye on that. Elsewhere, China tax cut. That supported the market. On top of that, the People's Bank of China, via reverse repos, sent 120 billion renminbi into the market, so equities like that. Aussie, political uncertainty. There was a vote over on Sunday, and the governing coalition may lose its one-seat majority. Latest headlines out of Australia were that they look to run out the government as is, but the markets hate uncertainty, hence equities came off in Australia. And then Trump announced that the US would leave an intermediate range nuclear force treaty with Russia. Okay, arms race back in the game. Look at some defense names. Who is out there building mid-range weapons and rockets, and look if you can long that. Also keep an eye on uranium. Potentially, it's in the dumpsters. Uranium might be a buy opportunity here on a longer term basis. Two reasons. One, electric cars globally, especially out of China. That's not going to be able, that demand for electricity is not going to be filled by coal alone. So there's going to be many, did I say many more nuclear reactors being built in emerging markets, especially China, and hence uranium might be a longer term buy, unfortunately, but that's my personal opinion. Who cares? Prime Minister May is in trouble as she may face a revolt over the next 48 hours if she doesn't succumb to Brexiteers' demands. It's a mess. It's a mighty mess. Headlines coming over the ether by the second. Pound extremely volatile. No real significant tier 1 data for this week. So let's stay clear of the pound for now, except for my day traders. Have fun, lots of volatility, make some pips. Italy, the BTP, that is the Italian cash sovereign bond, may test 3.3 again. We have a relief rally. Why? Moody's downgraded Italy by 1 notch, but not down to junk. That was priced in. So now buy the rumor, sell the fact, i.e. relief rally. The spread came off. We were actually a little bit higher than 338 already, close to 350. That's the spread between Italian 10-year sovereign bonds and German 10-year sovereign bonds as the main representative for the strong part of the EU versus Italy too big to fail. Spread now at 288. Please recall that the government in Italy demanded from the ECB and imposed on the market a maximum spread of 4%. It would never get there. Well, we'll see. The market still has that on the radar. This is just a relief rally. Also, we're seeing a relief rally in Italian bank names. Let me remind you, they have a 256 billion non-performing loans on the books, all right? And they are the largest holder of after the ECB, after Italian sovereign debt. So if this crap continues between the Italian government wanting to run the budget deficit higher than the EU wants it, this drama continues. So this is actually an opportunity to get short Italian banks on any relief rally. They are crap. And the asset purchase program by the ECB stops end of the year. So expect Italian spreads to widen if the number one buyer of Italian sovereign debt, i.e. the ECB, drops out of the market. Great opportunity to short this shit. Excuse my French. Strength versus weakness overnight. As we can see, risk on, so flows out of the yen, and then typical for a Monday, pulling the euro higher. 116 in the 6E future was a given. It was free money this morning. 116 short. Dees, did you short that? I want to hear as a sounding yes, Jay. I did short euro dollar 6E at 116 and above. That was so easy. Okay, on we go. Risk events this week. Let's do this live together real quick. If I can find it. Yes, I can find it. We go to all. We go to this week. Last this week, and we apply settings. Can we do this again, please? All. Thank you. And apply settings. Here we go. All right. 21 through 27. Here we go. Where are we? Where are we, Jay? Okay, Monday. Today is the 22nd. Okay, we're good. So DeBell speaks. He was pretty actually dovish the way that he spoke. So Aussie dollar range bound, but seeing a little bit of strength. Okay, good. Then what's of importance to us is we're keep an eye on PPI in Germany, Producer Price Index. Again, most important economy in Germany, so we want to keep an eye on inflation figures. PPI is a major force in that. So keep an eye on that. And then consumer confidence for the EU. This is no way is this yellow. This should be at least orange. As you can see, consumer confidence is coming off. That's not good. Consumer confidence. And then we have the ECB on Friday. We will keep a keen eye on what the ECB says in terms of economic development within the Eurozone. Last time they said we are beyond peak growth already. So that's not that positive. This is an artificial intelligence conference where Carney speaks. You can see that here by clicking on here. Machine learning, that's the future. Germany completely asleep behind the wheel. So the price goes to either China, Russia, or the US. Whoever wins the machine learning race rules the world next. End of story. Flash manufacturing PMI, 52.6 over in Japan. Unfortunately, the yen doesn't react that well to economic numbers once more. It more deteriorated to a risk on, risk off currency. Then we have flash manufacturing PMI and services PMI out of the Eurozone for Wednesday. So my traders know how to pre-position for this. Expect it to be coming in weaker, not good. Keep an eye on this. Euro short, keep an eye on that, euro short, simple. No way we can long the euro except for day trading or very, very, very order flow driven trades, short term, okay? Swing trading and position trading, the currency is a short, end of story, except if on Friday the ECB comes out and states something like, we may hike rates ahead of September 2019 because the market is pricing in September 2019 currently as the first rate hike in the Eurozone. Then we have flash manufacturing PMI once more. Sorry, this was French. Obviously, the Eurozone is more important, but it's the same picture here, okay? I don't care that much about France. I do in a sense, but more important to me is the overall Eurozone. Okay, then we have a dollar, flash manufacturing PMI, flash services PMI. This is a red event. These guys are completely asleep behind the wheel. It's a red event. And here as well, you can see, okay, coming off a little bit, but still way beyond 50, so in expansionary territory. That's not so nice. That service is coming off a little bit. So maybe we are, in terms of economic cycle in the US, once more at the peak. And what Trump is going to do if it comes off, i.e. economic growth, he will start implementing tax cut number 2 and or infrastructure programs. He just does not want under his supervision, he doesn't want the economy to cool off. But it's a business cycle, of course, it's going to cool off in the next 1 to 3 years. So then we have the monetary policy report. I did prepare a slide for that. Obviously, as you can see, there's a 90% probability priced in that the Bank of Canada is going to hike rates based on decent economic numbers recently. And then, well, you know what? Let's discuss it when we get to the slide. We have a presser afterwards. That's great. And then when we have our payday, we have crude oil inventories get paid every Wednesday. It's just beautiful. Last week was awesome. I had a meeting and I missed so much money. It was very, very upsetting. Then we have the beige book. That's also not yellow. That's minimum orange. Beige book last time told us how bad the trade war is impacting U.S. businesses already. So we do want to keep an eye on the commentary this time around in the beige book. So of importance, guys, because this trade war is slowly starting to affect businesses and GDP in China as well as in the US as well as globally. So do read the beige book report. I know Dees will do it anyways. She always does. All right. Then we have German consumer climate coming off a little bit. Have a look here, but still very positive. But we do keep an eye on that. We have IFO business climate in Germany. That fell off a cliff. Not good. That's basically due to the tariffs and the trade war. So we do have to keep an eye on that. That comes off again. That's going to be weakness for the euro. All right. Then we have the ECB, slide prepared for that. We'll get to that in a second. We have durable goods orders coming in really bad in the US. Why? A, it's a hectic indicator, but B, because a lot of orders were placed prior to the implementation of tariffs. Goods trade balance. Oh, testing channel, sorry. Okay, not important for us. And then we have advanced GDP in the US, and now it's coming off of the 4.2 last time. And this is what is priced into the market, so don't be too upset about this. ING actually expects 3.6% on this, priced in as 3.3%. Again, we had this above 4% growth rate last time because businesses got business done prior to the implementation of the tariffs. And that is to be, that is expected that this cools off now. On the other hand, some of this cooling off will be balanced out by refilling inventories. Inventory levels are quite low in the US, so that's what happens in a business cycle. First, we fill up inventories. That's why you always want to keep an eye on inventories. And then we have consumer sentiment revised, University of Michigan revised a little bit higher, and then Draghi speaks on Friday. Where due to speak? Inauguration at the lecture hosted by National Bank of Belgium. Okay. Highly unlikely that anything of importance in terms of monetary policy is going to be said there. Good. That was that. Back to business. Slides. Euro, important. Tuesday, consumer confidence. It's a leading economic indicator. It's cooling off. If it continues to cool off, the euro is a short. Wednesday, flash manufacturing PMI. Forecast 53.1 versus 53.2, so slightly weaker. And services PMI 54.5 versus 54.7, slightly weaker. Look at the composite. We are coming off economic growth in the Eurozone. And that is of importance to us on Friday. What does the ECB say about that? Thursday, German business climate, 103.2. That is also a leading indicator in terms of potential economic growth weakness. Sorry, I need to turn this guy off. Where do I have them? Where do I have this guy? Okay, here. I have him here. Excuse me, guys. One sec. Let me just turn him off real quick. Jens, hopefully we'll have that minute. Okay, good. All right.
Life is life.
Yeah, and then focus, state of Eurozone economy. Are the risks tilted to the downside, as last mentioned? Then intentions of reinvestment policy. We need to know what are they intending to do with all of the security holdings that they have, all of the redemptions that are coming through, what are they doing with the monies received? And then the timing of the first rate hike. Not recently suggested that the first rate hike might come in prior to September 19. Obviously, it was a bullish reaction by the euro, but Pratt, that's the chief economist, suggested the market had moved too dovish. Again, another hawkish comment, Terry, by the gentleman out of the ECB. And this is how it works. A central bank sends off some of their members in front of a mic and drops these cues. And then the ECB gremium gauges the market's reaction. So this was to gauge the market's reaction to hawkish commentary from ECB members. Okay, it's a game. It's to see how does the market react. Can we actually on Friday communicate a little bit hawkish? Very, very interesting. And then the view on Italy will be of importance. Obviously, you need to have Italy on your radar. It's just that important. Okay, and then on the Bank of Canada side, as I said, 90% probability that they're going to raise the rates by 25 basis points to 1.75. And here you need to know that the Canadian economy is highly linked to the US economy and positive for everyone involved. This new trade deal between the US, Canada, and Mexico removed a key risk for the Bank of Canada. A key risk is now out of the picture. Now, the market expects an upbeat tone out of the Bank of Canada and that they're going to continue on their data-dependent, gradual approach to lifting rates. Anything else out of the meeting will be Canadian dollar weakness. There are some expectations that the Bank of Canada may revise down their 2018 GDP growth forecast by 20 basis points. Okay, so that is already slightly priced in. And the market is pricing in 3 more hikes in 2019, January, July, and October. So as long as the Fed is hiking, Bank of Canada is also on a hiking cycle because the economies are so highly linked together. All right, you need to know that. All right, off we go to the dollar. Friday, US GDP, third quarter, expected to come in 3.3 versus 4.2. Now, recall what I just told you. Business got done prior to implementation of tariffs. Tariffs are now implemented. Business getting it done is more difficult, i.e. GDP growth is coming off. ING says consumer spending supported by tax cuts and robust jobs market is still super positive. Also, healthy corporate profits and positive economic outlook by businesses in charge encourage business investments. Once more, dollar long. Don't short the dollar in a position or in a swing trade right now. Try to long the dollar. That doesn't mean that the dollar doesn't come off. Us big boys manipulate the dollar lower. Why? We have to, because everyone, their grandmother on the professional side, every fund is longing the dollar right now. Net trade is expected to come off sharply after the huge swing in the second quarter ahead of tariffs implementation, but balanced by some rebuilding of inventories. So keep an eye on inventories as well, please. And last but not least, commitment of traders. Aussie currently a long bias. As long as the trade war goes on, I can't long the Aussie dollar. Yen, long bias. Anytime the sentiment switches to risk off, I'm long the yen or the 6Y, the future. Kiwi on its way to a long signal. So nothing much changed there really, except that all of the CFTC COT traders keep getting long signals on the Aussie that don't work. And they don't work because of the damn trade war. Volatility. Volatility in the euro is increasing again, of course, due to Italy and the budget. Then on the pound, it's coming off a little bit. Again, this week, expect the pound to react to headlines regarding Brexit all day long. It's going to be, for swing traders, it's going to be a nightmare because there's a high likelihood that you're going to get pushed out of your trades, pushed off your trades. And then on the yen side, we see volatility coming off. We do have inflation numbers out of Japan this week. I didn't mention that. So we do want to see if inflation pressures are increasing over there. And then the VIX coming off still at elevated levels, 19.338. That's pretty high still. So expect a lot of vol sellers to step in, trying to push this lower every single time we have risk on sentiment in the market. Option pricing, bullish euro dollar, cable and dollar Swissy for this morning, and then bearish euro pound, euro Swissy, gold and silver. Option flows indicating bullish euro, yen, Swiss franc and gold. Let's have a look. Euro, yes. Yen, no. Swissy, no. Gold, no. Gold's coming off. Bearish for Monday, Aussie, pound, and cat. Aussie and cat actually rallying as we speak. So that's what we do. We put all the puzzle pieces together and come out with a potential trade for the week. And for this week, I'm looking to short the euro Canadian dollar either now or at higher elevated levels. Why? Euro, Italian budget drama expected to continue, although we did have some conciliatory tone this morning on both sides. And I expect we do expect weaker PMIs out of euro and potentially dovish ECB. The euro is being manipulated higher. I expect on Friday the ECB to come out dovish. And then on the Canadian dollar side, potential hawkish Bank of Canada hike is priced in, and a potential bid in the oil market. If oil weakens, the trade could be in trouble. So the risk to the trade is that the euro numbers this week come better than expected. I don't think so, but it is a risk, and or a dovish Bank of Canada. Have a look at the trade structure. I'm looking to short, well, I am short, but I'm looking to short right here. Really a very conservative level. This is for you, is the liquidity above here, right? If you want to play this conservative, short the area up here around 153.20 to 30, maybe the liquidity above, and then when the gamma hedges are coming in, But the trade for this morning is, or for this week on a swing trading basis for me is hit it right now and then take profits around the 149, 148.90 area. I expect that's a form of fair value area. I expect resistance there, i.e. support, sorry. Okay, so let me see if we have any questions. No, the non-performing loans in Italian banks, you actually need to, great question, Ulrich, you need to go into, here's what you do. Find the ETF, Italian banks, or European financials, and look on the ETF side at every single individual member, Italian banks. And then go into the balance sheet and look at the non-performing loans. It's all on their website, legally, they have to publish this. So go onto the website of each individual bank under investor relations and pull up the last balance sheet and look at the one that has the highest exposure to non-performing loans and from what, okay? That's the process, that's how you do it. Euro yen short. Yeah, that could be a potential trade. Let's see, how many minutes are we into this morning meeting?
No more. We are over, but you have 1 minute more.
Okay, no, that's okay. Euro yen, look at top edges, do it the same way I did here. Look at where's your top edge, where's your bottom edge, look at where's fair value. There's a role reversal right here, for example. You do the same thing on the euro yen. See if you can actually short that at top edges, right? Not in no man's land. We do not trade in no man's land. It's impossible. And learn how to trade volume price reactions. Okay, all right, guys. Thank you very much for showing up. Thank you, Stanciu. I appreciate the positive comments. Thank you, Jens. And then I hope you guys are going to be able to make some pips this week. I'm looking forward to speaking to you again next Monday if you want. And have a very successful week. And thanks for showing up and for your time. Bye, guys.
Love you, but the time is our limit. So, but for that daily, tomorrow is another day. Tomorrow a new day trader. We have 5 days a week, 5 different traders. Hope to see and join you all again tomorrow. And if you'd like to see and watch this again, just go to our YouTube channel, youtube.com/Admiral Markets FX, and you can see it again and again. It usually takes 1 or 2 hours, and then it will be available. So just keep calm and all the time good trades. Greetings from Berlin office. Bye bye.